Welcome to another episode of Test, Optimize, and Scale. Excited to have Kinsey Cronin here today, Senior Vice President of Business Development at Prime Trust. Kinsey, thanks for being on the show.
Thank you for having me, Jason.
And Kinsey, I've known you for years now, back to the StartEngine days, and have a strong understanding at the role Prime Trust plays in the investment crowdfunding world. But could you share with us a bit more about yourself, about your story, about what Prime Trust does?
Sure. So I got into crowdfunding back in 2016, just before the regulation crowdfunding regulations came into effect. And I had spent the first part of my career working in entertainment in Hollywood. And I just was looking for something that was a little bit less of a dinosaur, I guess, of an industry. I fell in love with working at startups, and I loved the idea of being able to start small, be scrappy, and just grow something and be able to make decisions on the fly and have a real impact as an individual, and then also as a company doing something new, being able to have a major impact. So when I started working at StartEngine, I got to work with founders, entrepreneurs every day and talk with them about their business models and about their needs for capital, which is what we were doing. Our job was to help them raise capital, right? And also just about their communities, because the communities that supported them or were excited about them, that's probably where they're going to go first for investment. So I loved doing that. While I was there, I helped hundreds of companies, which was just really rewarding to participate. You know, not every company was successful, but the ones that were, it was just so awesome to see that money go to work, and to see the relationships built between the founders and the entrepreneurs and the teams and their community of investors. So, you know, my mom became an investor in a couple of campaigns, and she still talks about them. And it definitely, seeing her do that, and it was the same as seeing all of these other people who maybe for the first time were participating and supporting a company, even if it was a few $100s at a time. And I loved being part of that. So a couple of years ago, 2.5 years ago, I made a switch from StartEngine to Prime Trust. And Prime Trust is the underlying escrow services provider for StartEngine and for lots of other platforms and individual campaigns too. And so what we do at Prime Trust is we process the investor information, their AML KYC, it's called. It's the compliance review that you do on each investor. We do the same thing on the issuers, and then we process the investments, hold the funds in escrow, and then disperse the funds. So we actually get to send the money to these entrepreneurs who have raised it, and that's a really fun part of the process too.
Absolutely. And that must have been so exciting to be part of the whole growth of the industry. Investment crowdfunding from the ground up during the Reg CF days, a lot of historical campaigns on the StartEngine that are case studies, probably in textbooks at this point, and you got to be part of those directly. I remember you you hosting and emceeing some of the founders summits there as well too, and then to be able to work on the back end now, making everything secure, anti-money laundering, know your client processes, make sure that there's no fraud going on and that it's safe for both sides of the marketplace, for the issuers, for the investors, which is going to be, pinnacle to growth, is that trust across the board. What have been some of the, breakthrough moments that you've seen in terms of growth of the industry? We've been talking about it the last few weeks with March 15th and the expansion to Reg CF occurring. But what were some of the moments where you really noticed critical mass, whether it was the volume of issuers on any of these portals, the success rates, any things like that? Where have you seen the industry grow the most?
Wow. Okay. So, gosh, I remember it was in April of 2016 when we launched at StartEngine. It was the first 6 companies that were raising under regulation crowdfunding, all on the day the regulations came into effect. So there was a few platforms in the industry that all launched, at least a handful, on the same day. So there was so much buildup, and we were working with such basic technology as well. So, not only Was this something that the portals were figuring out? And obviously, as you know, in regulation crowdfunding, a portal is necessary. So there's only really one way to raise money using regulation crowdfunding, and that is to have a portal or a broker dealer essentially underwrite your raise. It's really not the same as underwriting, but they do have to make sure that you're following the rules in a certain way. So we were doing this with the most limited technology. I think at the time we were using Fund America's Invest Now button rather than an API. So Fund America has, which is now called Prime Trust, has an API system, which most of our platforms use so that it's a totally seamless experience. You go on the platform as an investor, you just have a totally seamless user experience of creating an account, putting in your information, your money. At the time, we were using the Invest Now button, which is essentially like an embeddable widget. That was all that existed. The APIs were not built yet. So at StartEngine, we were basically doing everything piecemeal. We were piecemeal figuring out how to get the FCCs filled out with the attorneys and get them filed properly in the SEC's system, which is called EDGAR. We were figuring out it separately, how to create a campaign page that is linked to the other campaign pages that's on StartEngine, that follows all of the marketing rules, which at the time felt very overwhelming because we hadn't figured out the best ways yet. And then we also had to figure out how to get these investors to actually be able to put their money in and go through an AML KYC using this widget. So there's a lot of manual work involved. And as far as educating investors, there was no major investor base of people that already knew about equity crowdfunding. So every step of it was people who were willing to learn and to kind of break the mold. And that means sometimes you get a couple bruises. It's not easy to do. So it was exciting. It was scrappy. And it just was like a lot of squeeze and not a lot of juice. Now I think it's totally different 5 years later. So if we're looking at milestones, I think you see slow development over time, breaking through all of those technology issues, all of that education issue. You hit around 2017 when crypto came on the scene. So I think that is a milestone. We were working so hard to raise a couple $100,000 for some of these companies, and we were following so many rules. And then we find out that people are out there with what they're calling ICOs, raising like $100 million in 25 seconds on the internet, and they're not following any rules. And there's this huge group of people that is excited about crypto. So obviously, that doesn't really happen so much anymore because it's illegal. But there was definitely starting to be this coming together of the Equity Crowdfunding Jobs Act regulations and the people who have been working there for a long time, and the crypto space. So I think that really started getting some attention to the space and started injecting a little bit more power into it. And now another big milestone, as you mentioned, is March 15th's update to the crowdfunding regulations. I know of several founders who are really excited because they're already oversubscribed, and they know that once we get past that timing, they can resubmit their Form Cs and go from the $1 million cap up to 5 million. And if they're already oversubscribed, that money is just waiting. So that's really exciting. And I think that that's going to bring a lot of new interest into the space.
Oh, yeah. And the size of organizations that are going to be involved and the quality of the deals as a result. Looking at the math, being able to see, $20 million, $25 million type valuations for a Reg CF deal versus more of an average of around 5 million. Of course, 5 million versus the 1.07 is very exciting. And then hearing in conversations some of the groups that are now discussing Reg A Plus with the expansion that is occurring there too, I think the whole industry is just really going to be transformed over the next couple of years here.
Yeah, I think so. I've definitely heard some people say, one person that I was interviewing for my podcast said that she thinks that crowdfunding is a failed experiment. And I think that's fair why she says that, especially somebody coming from the crypto space and seeing way more investment in crypto than in equity crowdfunding. But I don't know that I agree that it's failed. I just think that it's come out certainly in a different way. It's measured, and I just think it's kind of a tortoise and the hare sort of thing. Although it's not like crypto and crowdfunding are racing against each other. I think they're very much part of the same thing. In fact, if you go onto Wikipedia and you look for the biggest crowdfunding raises ever, raises for cryptocurrency companies, ICOs, are listed in there in that list because they're considered one and the same.
Sure, cryptocurrency crowd sales. And I saw the same thing happening in our offices during 2017, where our inquiries started including the word crypto, ICO, initial coin offering. 2018, it started shifting quite a bit. And it was a remarkable process to go through because every day I was explaining to people in my personal life and my business life what equity crowdfunding was. Meanwhile, I started getting information about Bitcoin, about ICOs, and already knowing that I'm operating in the space, but just hearing the scale of awareness and how it shifted for a while towards cryptocurrency versus equity crowdfunding was very interesting. Over time, it became much tougher to do, ICOs, security token offerings, initial exchange offerings. It was looked at that the industry was dead, that it was a failed experiment by many regards, by many aspects. I remember going to conferences that were 5,000-10,000 people, and the next year were 500 to 1,000 people for the same conference. The industry definitely changed there. And Bitcoin's on the rise. There's a lot of things to talk about for cryptocurrency, but just looking at equity crowdfunding, March 2020 onward to today, looking at metrics on platforms like King's Crowd, where we're seeing month over month growth in terms of how much is raised, looking over 500 issuers today, now seeing the adoption and awareness levels from both issuers and investors in the marketplace is just very exciting to be a part of. It reminds me of those ICOs days, but built on a lot more stability, going back to compliance, going back to that trust for both the investors and the issuers, which didn't really exist in cryptocurrency. I knew people making money off those ICOs. I also knew people who were losing money and not getting out while perspectives were high and valuations were up. To then walk away with nothing with some of those tokens. I'm just looking at a much stronger foundation for private equity investments to exist for issuers and to be available for retail investors in this growing vertical.
Absolutely. And, I think it's also really relevant. This is another thing that we couldn't have predicted, but the GameStop saga that's gone on. And I don't know if you saw the hearing that was on February 18th, but there were a lot of questions from lawmakers about, can Robinhood investors who are their customers invest in Robinhood itself? And the answer is no. And the lawmakers are saying, well, that's really unfair. And why do you have to do a wealth test? Why do you have to be accredited? And, we've been talking about this for a long time. But it's what I find really interesting is, there's so much protection again about investors investing in companies, and of course that's important. Nobody wants to see people taken advantage of, being swindled, but we do let people go to casinos, right? Like we don't cap them on what they're allowed to spend in Vegas. They can spend as much as they want, and we do get so worked up about investors, but it seems like maybe what really happens is that in the case of GameStop, you've got the other guys, the bigger guys are getting affected. And instead of wanting to say, hey, don't take money from us, that matters. Instead, it's let's protect the little guy. It's like, it's not for my own sake that I want these changes to happen. It's because I want to take care of the little guy. I want to protect them. And I think we're starting to see this new dawn of the retail investor in a lot of ways, on the secondary markets and also in the primary markets. I think this is something that is going to become more and more interesting. It's just part of a cultural wave.
Absolutely. I read some articles talking about the economy last year and how stability and even growth occurred because of all of the new volumes of retail investors that entered the marketplace. A bit outside of equity crowdfunding, but at the same time, that's what we were seeing was new retail investors come to invest in early stage deals, looking for the next Facebook, looking to get involved in emerging verticals. So in that regard, I do see a direct reflection. And when they talk about some of the groups on social platforms, not to name any directly, but some of the Reddit type groups, I was seeing that happen in cryptocurrency years back on platforms like Telegram. We try to encourage it compliantly on platforms such as Facebook, LinkedIn. I know StartEngine, some of the other platforms have pretty active groups there as well too. But being able to build an audience as a predictor for how much a group could raise on their filing or their next round. I mention groups all the time, like Legion M, that are on path to a million investors and have upwards of 30,000 today, and being able to launch campaigns around new films through their entertainment company and already have all of these new audiences there. I just worked on an article with Forbes about the new premium audience being user owners. And not just saying retail investor for the upside of trading or their portfolio, but because they really back a brand, because they're a customer, an ambassador, and also a shareholder. I see that growing more and more in the marketplace.
Yeah, I love Legion M. They never raised on StartEngine. I think they were on WeFunder, but they were such a great group. We talked to them a bunch, and I love their spirit and what they're doing. And I'm really excited to see what comes out of them and what comes out of so many of these companies. It's kind of a long tail, right? Because you've got the funds are raised, and then the companies are built, and then they're evolving all the time, and eventually I think you can really measure what the difference is between a company that has been equity crowdfunded and has maybe thousands of smaller time investors that also make up the community base potentially, versus a company that doesn't have that goes a different route. And obviously, we know venture capital and other types of institutional capital. I mean, there's a lot of benefits there too, right? There's the connections, there's the ability to more easily partner with other portfolio companies. There's the opportunity to be featured in magazines and things that the VCs have influence over, right? So there's definitely something to be said for raising capital that way. But what I would love to see is this sort of future where we have companies that are going to the traditional side, but also going to the average person. And so in the same way that an institutional investor can make a major investment in the stock market, for a pension fund or something, an individual can also go to the stock market and buy one share. And I'd love to see more early stage founders thinking about that option and thinking about the different ways of mixing and matching, because benefits for the institutional side, there's also so many benefits to having your community be fully invested in you.
Absolutely. And I liked the casino reference that you made earlier. I've heard that before. I think it really stood out to me when learning about why the laws were created in the 1930s and the investor protection. But meanwhile, the casino and other places were not stopping you. They'd even encourage you to go beyond limits. I know that was why a lot of the rules were put in place for Reg CF in terms of caps of how much any individual investor could put in. I'm glad that those are changing up now, allowing credit investors not to stop at 107K across all of their investments, and having more flexibility for how much anyone can participate at. And I definitely see the strength in numbers coming to fruition. I definitely see that ability to build a large audience and raise retail amounts all the way up, but to be able to hit much larger caps in quicker periods of time. And wanted to ask, are you guys seeing a lot of interest from new portals, new FINRA regulated sites, where these type of rounds can occur? I know you said you work with StartEngine and others. I know there was a list of about 60 or 70 FinRegula portals a few months back, but with these new laws emerging, I know we've talked with a few that are in planning and even have a couple as clients, but is that a trend? Are you guys seeing a high volume of new groups looking to host these type of deals?
Yes, absolutely. So we're seeing two different types of things. One is we're seeing some of the groups that were only involved in Reg A Plus are now opening up to regulation crowdfunding as well. So, different broker dealers and other organizations that were focusing on one regulation because there was a bigger upside. Now they're saying, okay, we want to be involved in regulation crowdfunding too. And many of those we were already working with. But the new ones are definitely coming in. So I think we started first hearing about the new rules from the SEC in the spring of 2020. And over the summer, I think we had some record numbers of new crowdfunding portals coming on board, signing up for the APIs with us so that they could have that whole back end with the investors handled. So we're seeing tons of growth, certainly in places in sectors and niches like real estate is growing really fast, but in a few other interesting niches as well. But then especially just the general, like, hey, we want to get in this game. We want to help people. We think we have a good model for how we can help list, how we can price, how we can engage the community. And I love seeing that because every time a portal comes, in some cases they're gonna specialized on a few companies. In others, they're going to have a wide reach. But I love that founders will have a lot of options for finding the right community for them.
Absolutely. I have seen a lot of niche, vertical, industry-specific type portals coming to our desk, coming to different discussions that we're having. Larger entities, licenses, brands, things that are well known but not necessarily represented on an equity crowdfunding platform today. So just imagining the conversations you guys have Prime Trust, I could guess that's a pretty big part of the equation at the moment.
Yeah. And we love working with new portals. It's really exciting and fun to see how they're going to go ahead and help the ecosystem. And I love having conversations and having founders say things like, look, we're here to help brick and mortars that have a certain amount of revenue already, that have existed for a certain amount of time, that have a certain number of reviews on Yelp, a certain star rating, and they have to be interested in debt because that's what we're offering investors. I love that because it's so specific. And what they're doing is they're compiling all the tools that community or that type of founder really needs. And so I love when that happens because then you think like, yeah, brick and mortars matter. And now these brick and mortars are going to have this whole playbook and this support system supporting them. And the other thing we're seeing a lot of is just more community in general. Companies that are starting up that are just fully dedicated to providing resources for the equity crowdfunding space or news about the equity crowdfunding space. I can think of a few of those that have popped up over even just the last couple of months. So there's more attention. There's more success stories. I'm hearing when I'm talking to investors, like traditional investors, venture capitalists, they're saying, look, 5 years ago, it was kind of taboo. We were not very interested in any company that had done crowdfunding. We were wondering, why do you need to do that? Now it's much more accepted. It's interesting. We are still going to want to know the details of who's on the cap table, how is it organized, what were the messaging when you did this raise, because it does add some layers to look at. But we're super interested in investing. There's no reason not to invest in a company that has such a large dedicated backing for a customer base. And of course, that's not everybody. Not everybody loves equity crowdfunding, but I'm just hearing so much positivity that it definitely feels like the future is bright.
Oh yeah, I'm seeing on some checklists venture-backed startups, not only as a common type of group, but as an indicator of higher level success. And even some accelerators here in Los Angeles and Santa Monica, including it as part of their program to be able to launch on a portal, take anchor investments, amplify that type of response, simultaneously build a customer ambassador base. It's exciting to see it being, adopted, transitioned into so many different models. And based on the success you've seen working at StartEngine, working at Prime Trust, working with portals directly, issuers, what are some of the factors you've seen for success? Are there any recommendations that you could provide in terms of what founders could test out, whether it's for their plans or for an individual, for an entrepreneur, a team, a group that is already live and looking to get more traction? What are some of the key points that you look at in terms of a successful campaign?
So there's so many different ways to have a successful campaign. And your podcast is called Test, Optimize, Scale. That's definitely part of it. You've got to test the market and find out what works and do more of that, right? But I think one thing that's really important that any founder going into this needs to be prepared for is that they need to know their company, right? This process is in depth. You have to be ready to dive into spreadsheets. You have to be ready to have a lot of conversations with lawyers. You have to be ready to spend some money. And ultimately, you're going to know your company really well. And what's great about that is you come to know your company from a on paper legal and financial perspective, right? That's important. You're coming to make plans that you're going to stick to, but you're also you're going to come to know your own message because you're going to be testing it. And so it's actually a great time to do that. At the time think about what you normally do if you're going to raise money from a traditional investor. You make a deck yourself. Hopefully you have, your spouse, your kids, your dog, your cat, everybody look at it, right? You want to send that deck around to friends, make sure people get it, practice pitching it and whatnot. And then you go out and you pitch it. But the whole time you're pitching based on what you think or what your small community of people thinks. Maybe you even do surveys and, maybe you really go wide to be sure that you've got the research. But when you're raising money from the same people that you're going to sell to, which by the way, not every equity crowdfunding campaign is like that, but if you've got a consumer product and that's what you're doing, you're getting real-time feedback. You're finding out what they're responding to and what they're not responding to, and you may be adjusting your service, your product accordingly. So I think knowing your company is something that you're going to have to be prepared to do, and then also keeping your eyes and ears open beyond, because what I've found is that the best, most sort of ingenious projects or campaigns, they're doing all of the ad spend, they're doing the marketing campaign, et cetera. But what they're really doing is they're taking advantage of moments, So, for example, I was speaking with a founder recently. I was interviewing him for the InCrowd podcast, and he was talking about how he was on Clubhouse and he was hearing people complain about the fact that Clubhouse was supported by people of color and was being grown by people of color, but wasn't owned by people of color. And that they wished that the investors were people of color, and that somebody should create something new that was similar. There was a social network that people of color could invest in. And so now this founder, he's building that, right? And he's listening. So then he goes back to Clubhouse when his campaign is launched, and he's like, hey, all of you people who wanted something to invest in, I've been listening. Here it is, and I've seen that happen a lot of times. I mean, that's a very personal one because you're hearing people talk, but playing off of any kind of moment, any sort of cultural movement that is going to hit people in an emotional place and really connect them, that is important. So again, you want to come up with a plan, but you're going to need to be agile with that plan and be paying attention and know how to communicate. And I think the campaigns that are doing the best, they're paying attention, they're communicating all the time during the raise, they're listening, and then they're responding. And honestly, the people who do that the best are the people who really are passionate about their company and what they're doing, because then it just comes. They don't even have to try. They're listening, and then they've got a response, and they're energized and they're excited, and they're going back out. So, and that's how it should be. The people who are the most passionate and excited, they should be sharing that, and they should be getting the reward from that.
100%. They say the most important aspect of communication is listening. And when I'm asked which campaigns, which verticals are going to get the best return, it's an assumption at best. It's a difficult, conversation. I would have been right. I would have been wrong in some cases. So I try not to state that too heavily. We always look at the analytics to prove what's working. As you said, market testing. If we're running a Facebook campaign, we'll put in 4 to 10 audiences, multiple creatives for each. We'll let the data tell us who's responding the best, and getting that real-time info, those real-time data insights. I always say it's only as good as what you do with it. So then we'll optimize towards it in a further degree. But I love how you pointed out the listening part, Clubhouse. I even think about articles and different headlines that would be in the news that day, that week, how it may reflect what that user is seeing, and that prospector investor, how they may process that information. If they just read about a company in an emerging market, maybe it's automated retail, and then they see an ad, they get to an offering page about an automated retail investment opportunity, it could really resonate with them. Or as you mentioned, different interests, different minority owned. We actually work with an automated retail company that was on StartEngine for both the Reg CFs, now the Reg A Plus, Popcom, and Dawn Dixon, female Black CEO, gets all types of interest from those Clubhouse rooms. I think we're talking about some of the same groups and those investment opportunities that become available to those audiences. I know of different advisors, different accelerators that are working with volumes of campaigns and underrepresented deals that are just getting such strong traction. And like you said, it's the moments. I haven't heard it quoted like that before, but it's such a perfect way to frame it.
Yeah, I was talking with a founder who raised on StartEngine as well, that has electric trucks, and it's called Atlas, and they did a great raise there. They're actually doing Reg A Plus right now using their own website and the Prime Trust widget that I mentioned earlier, which has been developed much over the last 5 years. But so they have an investment page up, and I was asking them about what they do for marketing, and their president's response was basically, a lot of what you've said about, test, optimize, scale, pretty much. I don't know if she used those words, but one thing that she said that led them to is these different pockets of demographics for their investor base. So they found out that by testing, they found out, look, we're excited about an electric battery for a truck. We see that as a problem because there are too many. The existing electric batteries are not big enough or strong enough for a truck and for other uses, and we think that's a place that we can fit. And what they ended up with was finding out that the audiences that responded the best were people who love trucks, and also people who are environmentalists. And those weren't always people who shared both sides of the interest, right? There's people who just love trucks, and then there's people who just love electric anything, right? And so they're bringing together these two communities that aren't really known for getting along great, not that there aren't people that love trucks and the environment, but that they found, there's different types of people that they're appealing to. And it makes sense to listen to those groups, pay attention to the response, and be aware. I mean, they didn't tell me that they were doing this, but I can regularly with their user base, really must come at this point to really those investors' lives and that community's lives. So they are paying attention. And I think that that's led to a lot of success for them. Did you lose me for a second there with the internet?
Briefly, got the majority of it there. And I Definitely agree. You have to be listening, get the insights in real time. In many cases, the audiences that we would assume would work the best out of the gate don't. So, like you mentioned, trucks, environmentalists, perhaps we have 4 or 5 other audiences. We have historical StartEngine or equity crowdfunding industry wide investors that we can target and then filter by different interests. And we try to cast a wider net in at least one audience and let the analytics show us the top performing segments, the pockets of performance to optimize towards for that exact reason. And if we could identify that and shift further and further towards them, if the audience is large enough, it can be the difference from a campaign that is performing marginally and one that is performing to outstanding levels in comparison to industry averages. And actually wanted to ask about that and, to the title of the show, but I think it's an important question, is what to do when a campaign's not working, which could mean many things. But if you look at, for the current day, where the cap is still 1.07 million, how many issuers actually hit that on a Reg CF or they hit their full Reg A plus goal? It's not 100%, to say the least. It's still, meaningful type returns the majority of the time these days, but it's still not 100%. So if a group is setting these milestones, they're not hitting it, or maybe it's just plateaued and they want to, ramp it up, accelerate things back, what type of recommendations could you provide to improve performance, or any stories that you can share around optimizations that made a large difference?
Well, I've definitely seen plenty of issuers in this situation where the original plan didn't work out. And I will say, firstly, that usually happens either because there wasn't an original plan, or because it wasn't, well thought out enough. So what you hope it is that this issuer decided to get started and start testing and see what happens, right? And they've still got a lot of gas in the tank. They've still got a lot of ideas. That's one thing that's really important, is just have a wide net, have a lot of different ways that you're going to go about this, and don't overinvest in something that you haven't made sure works, right? Um, that said, of course, if your community has already supported you in other ways, maybe you've done a Kickstarter or something like that, and you've already tested, go for it, go all in. But I think that's a big part of it. But once you have gotten to the point of, hey, we started doing something, it did well, and now we're plateauing, like we seem to have tapped out. That is when there's a few things. One, going back to the same investors is always going to be less expensive than finding new ones, right? So why is it that your investors haven't invested more? Why is it that they haven't invested twice, right? Especially if you're on your second raise. Now, that doesn't mean that you're trying to overextend anybody, but a lot of times investors are going to invest a little bit and they're going to be interested and they're going to be paying attention. Are you updating them every week or every day? Is there a way that they can go and follow you on Twitter or something and just constantly see that? I think the most successful founders that I'm seeing are the ones that are just really being very transparent with updates. But the second thing is, look, come up with some more ideas, think about it differently. Consider updating or changing your campaign video. Maybe you're focusing on the wrong thing. Look into those analytics and see what else they tell you besides what their people are picking for ads, because it might be about your messaging. So if your campaign video says something and then you have an ad that says the same thing and it doesn't perform well as other ads, well, that means you don't have the best ad in your campaign video. You're not phrasing yourself rightly, right? The tagline isn't the best one that you can have. So I would definitely recommend go back to the drawing board, figure out what else works. If you're already in it, just keep going, and find the ways to make it work. The other thing I would suggest also is look around at who's near you, because there's a few things. One, being around others that are, when I say who's near you, if you're on a platform and you're listed next to other investment opportunities, how do you compare to them? Are there investment opportunities that are similar to yours that are doing better or worse than you or the same on the platform? Is it possible that somebody else is stealing your thunder, or that they just have they're just doing a better job? And if they are, maybe you can learn from them.
Yes. Being able to, again, listen, see what else your audience is seeing. They say success leaves clues. Being able to adapt any of those, into your strategy itself. Really great how you mentioned going back to initial investors. We're seeing second investments more and more. For Reg A Plus campaigns, IR, investor relations, is such a big part of the process these days, where we worked with a cannabis company. They were taking in about $420 as their initial investment, and we're systematically increasing with IR efforts to much larger AOV, average order values, average investment increments, and even would tap into some significant levels by having that direct conversation with the new investors that are coming on. I've seen other opportunities emerge from that too, whether it's social sharing from the existing investors, strategic partnerships, even outside of the raise, that can come to fruition from it. So I think those are all great ideas, and ideas themselves. What can you change up about the video? You make it sound so simple of, hey, if it's not working, let's see what else will, and continually having that process towards it, and how that can be different than more of the historical, capital raise type discussion, but can really amplify with the audiences that are living on these portals. And speaking of amplification, what have you seen scale the most? Have you seen any large endorsements that have been part of campaigns, or any rounds that have just been particularly large? What do you think some of the elements were there for them to hit such high, benchmarks of results?
I mean, endorsement is always really big, especially if you can get a celebrity with a following of some kind that's relevant to what you do, and you can get a couple hours with them against a green screen just talking about your company, and then you have the ability to use that in ads as much as you need to. I mean, that is a method I've seen be very successful, and it is actually worth a lot more than that celebrity tweeting one time by themselves, which might be just as expensive. Being able to take somebody's face who's recognizable and really share them out. You guys have done that before at DNA, and we've seen that be really successful. Um, there's that. There's partnership. There's also lead investors, and I'm seeing that more and more now. Um, on Angel List, that's something that they do, right? Angel List is accredited only, but when you're an accredited investor that goes on there, you can see the rolling funds that are being put together by investors that you may have heard of, or that you can go back and see what investments they've made in the past. And so you can actually decide, hey, I want to invest in whatever this guy's investing in because he's just so good, right? And I think what's really interesting is more and more investors are getting involved in Regulation A plus and regulation crowdfunding. And so that, I think, is a major ringing endorsement, and even StartEngine has, Kevin O'Leary as a spokesperson who's very recognizable as an investor. So I think, even though he's not specifically endorsing any specific raises on StartEngine, I think the same kind of rule applies. When you have somebody who is trusted to have good judgment, and they are actually investing in a company, and now you have the opportunity to invest on the same terms as them, that's really exciting to a lot of people.
Yes, absolutely. Rayton Solar at the time at StartEngine, we're actually on our fourth round with their group, who's done about $10 million in investment. They were able to secure Bill Nye the Science Guy as part of their campaign. And as you said, for them to be in the offering video, for them to be posting to their audience, all very good things. We also ran ads ongoing for the length of the filing, featuring that video into Bill's audience, to audiences of projects he had been a part of. I think we tested about 248 About 248. We tested 248 different ad sets, different audiences, and we're really trying to see what resonated the best there. But I know that at the time was one of the campaigns that definitely hit scale, and they've been part of so many others. So, I find it to be a relevant topic today. Like you said, there's Reg CFs that are at 1.07 million, with, reservations or oversubscriptions that are occurring. So I hear it on the phone more and more today of, okay, how do we go from 1 million to 5 million? So, want to be able to put as many different tactics, ideas out there for founders.
Yeah, you know what I think is really important? I think that first of all, if you're not an expert in equity crowdfunding, especially on the marketing side, if you're not an expert in marketing, you should be working with somebody who is, right? So any founder should be working with people who know what they're doing, who can avoid making the mistakes that we all made back in 2016 and 2017 as we were fumbling around to figure out what could work and what couldn't. But I think the other important thing is you have to stay involved. If you're a CEO and you're not doing equity crowdfunding, let's say, you're just going to go pitch VCs or even go to the bank and get a loan. You're doing that, right? You're extremely involved in that. You're making the deck, you're making the pitch, you're taking the call, you're making the call, you're connecting, you're networking. Just because this is equity crowdfunding and you hire a marketing company doesn't mean you're not that person anymore. You still have to be that person. And now you can lean on a team that you're communicating with regularly, whether they're in your company or outsourced. But you have got to stay involved because you're going to let the experts tell you what's worked for other people, and you're going to learn a lot from that. But you're the only you're the company, your investors are your investors. Your specific fit into the marketplace is unique. And so nobody's going to be able to say, hey, we've done exactly that before and we don't need any of your input. We're going to be fine. I mean, I don't know, maybe every now and then somebody gets lucky, but I really think it's work with an expert and stay involved.
I like the mistakes in 2016 comment. I follow a quote that says, to be an expert at something, you've had failed at it every way you can. Because then you could see it happening before it occurs. You could take those learnings. And, us as an agency, I really describe it as working on behalf of that founder. So as you mentioned, they still have that role. We're certainly part of the team and bringing all these insights to the table. But the founders that are most involved, I often see as the ones that are most successful. And on any campaign we work on, I attribute the success to the founder and their hard work and everything they've done to put together the product and the offering. We're just amplifying it and acting as an extension to get more of the right eyeballs to what they're doing. But it is truly incredible to see what they're putting together. I mean, we've worked with founders that are being featured as a Forbes 30 under 30, or just being written about on a daily basis, and then that article gets repurposed by 100 other social pages. So yes, be as active as possible during the live campaign, and the results should follow.
Yeah, and that's the thing. I mean, there's only so much you can do. I think they put themselves at a disadvantage if they don't work with somebody like you who knows what they're doing. But at the end of the day, their investors aren't investing in you; they're investing in them. And so, ultimately, they just have to make sure that they remain part of that engagement in the narrative. And I'm sure some of the best ideas that have kind of been brand new, fresh ideas have probably come from those founders who are thinking, hey, I happen to know a whole little set of information about my community and what's cool about me and my product. And I think we can use that to get our message out. And that's something that, you're going to get the best stuff when you're closest to it. And that's the founder, that's the team.
And Kinsey, these are such valuable insights. I'm actually going to have my team go through this and take some notes and apply to our campaigns as applicable. Any closing thoughts, any closing ideas or recommendations for listeners?
Our listeners are mostly founders.
Yes.
Closing
Founders,
thoughts.
marketers, industry professionals.
I think, I guess I'll just say, I said it before, I think the future is bright, and I expect that things are just going to get busier. I mean, at Prime Trust, we are so busy, and we touch a lot of different market sectors within the equity crowdfunding business. So I think if you are in this space, whether you're interested in investing, whether you're interested in raising, whether you're making a portal or getting involved as a lawyer or an accountant or a marketing company that's making this area part of your expertise, I think you're going to be really busy. So, especially once this pandemic ends, although it hasn't slowed it down at all, it's actually picked it up, which is really interesting. We had the strongest quarter ever last quarter. So I think just buckle up because we are moving really fast.
Absolutely. And rising tides lift all ships. So industry wide, it's going to be fun to look back at these chapters 5-10 years down the line and see how everything's grown. And Kinsey, these are, such great recommendations, stories. If anyone wants to get in contact with you as they're listening here, what is your preferred method of communication?
So you can reach me on LinkedIn, Kinsey Cronin, or on Twitter at Kinsey Cronin. And the podcast In Crowd is at InCrowdPod on Twitter. You can learn more about Prime Trust at primetrust.com. And do reach out to me on LinkedIn or Twitter because I love talking about equity crowdfunding, and I'm happy to help anybody I can.
You heard it. Do reach out. Don't be bashful. And Kinsey, this has been so great talking to you. Really enjoy the recommendations. I'm sure the listeners are as well. Thank you for everyone tuning in. And thanks, Kinsey, for being here.
Thank you, Jason.